Good evening. Tonight, we're taking a closer look at the latest trends in US retail sales and how American consumers are responding to changing economic conditions, new tariffs, and shifts in the energy and automotive sectors. Let's begin with the headline. Retail sales growth in the United States slowed sharply in April, following a dramatic surge in March. This shift is raising questions about the strength of consumer spending and what it might mean for the broader economy as we move through the second quarter of the year. In April, retail sales edged up by just 0.1%, a stark contrast to the robust growth we saw in March. That earlier month saw sales jump by nearly 1.75%, a pace that caught many analysts by surprise. The slowdown in April suggests that the surge in March may have been a one-off event, driven by unique factors rather than a sign of sustained momentum. So what was behind that March surge? The answer lies in the anticipation of new tariffs set to take effect in April. With the government announcing higher tariffs on a range of imported goods, many Americans rushed to make purchases before prices could rise. This pre-tariff buying spree was especially pronounced in certain categories, most notably automobiles. March was a month unlike any other for many retailers, as consumers flocked to stores and dealerships to lock in pre-tariff prices. Auto sales in particular saw an extraordinary jump. In fact, sales of cars and trucks soared by over 5% in March, the largest monthly increase in more than 2 years. Dealerships across the country reported a surge in foot traffic, with buyers eager to make their purchases before the expected price hikes. But it wasn't just cars that flew off the lots. Consumers also stocked up on other big-ticket items and goods likely to be affected by the new tariffs. Sales of building materials and garden equipment climbed by more than 3% as homeowners and contractors hurried to buy supplies for spring projects. Electronics retailers also enjoyed a boost, with sales rising nearly a full percent, while sporting goods stores saw a healthy increase as well. One retail analyst described the scene as a gigantic clearance sale, with shoppers treating March like a last chance to buy before prices went up. The result was a rapid depletion of inventories, especially in the auto sector. At the start of March, new vehicle inventories stood at a 91-day supply. By the beginning of April, that figure had dropped to just 70 days, reflecting the intensity of the buying spree. While many retail categories benefited from the pre-tariff rush, gasoline stations saw a different story. In April, sales at gas stations fell by 0.5%, continuing a downward trend that began in March, when sales dropped by 2.5%. This decline came even as gas prices edged slightly lower, with the national average dipping to just over $3.15 per gallon, down from $3.64 a year earlier. The drop in gasoline station sales points to broader changes in the energy market and consumer behavior. Year-to-date, gasoline station sales are down nearly 4%. Several factors are at play here, including increased fuel efficiency, the growing popularity of electric vehicles, and shifting commuting patterns as more Americans work from home or adopt hybrid schedules. Gas stations have been facing tough times for years, with profit margins on fuel sales remaining thin and the number of stations declining steadily. In the mid-1990s, there were nearly 200,000 gas stations across the country. Today, that number has fallen to about 115,000. The current sales decrease is part of a regional trend, with gasoline consumption down in 4 out of 5 U.S. regions since 2018. The East Coast, Midwest, Rocky Mountain, and West Coast regions have all seen declines, ranging from 2 to 10%. These figures reflect not only changing consumer habits, but also the impact of global events. Fears of a potential recession triggered by the new tariffs and changes in global oil production have added to the uncertainty facing the energy sector. Let's turn back to the auto market, where the effects of the March buying spree are still being felt. In April, auto sales declined by nearly 1% compared to the previous month. The seasonally adjusted annual rate of sales fell to just over 17 million units, down from March's stronger pace of nearly 18 million. Despite this month-over-month decrease, April's auto sales remained impressive when compared to last year, up more than 11% from April of the previous year. In fact, April marked the second highest monthly sales reading since the spring of 2021, underscoring the continued strength of consumer demand for vehicles, at least for now. However, the surge that began in late March quickly lost momentum as April progressed. In the first week of April, auto sales were running nearly 30% above normal levels, but by the third week that figure had dropped to just 6% above normal. This rapid deceleration suggests that many consumers who might have bought cars later in the year chose to make their purchases early, in anticipation of higher prices. Inventory levels tell the same story. At the start of April, new vehicle inventories had dropped to 2.69 million units, down sharply from the previous month. The day's supply, a key measure of how long current inventories would last at the current sales pace, fell to 70 days, down from 91 days in March. Light trucks continued to dominate the market, accounting for more than 80% of all vehicles sold in April. This is up from 80% a year ago, reflecting American consumers' ongoing preference for SUVs, pickups, and crossovers over traditional sedans. The slowdown in retail sales growth in April is a reminder that, consumer spending can be highly sensitive to changes in economic policy and market conditions. The pre-tariff buying spree in March was a clear example of how government actions, like the imposition of new tariffs, can prompt consumers to change their behavior, sometimes dramatically. But as the effects of that buying spree fade, retailers and manufacturers are left facing a more uncertain environment. Will consumers continue to spend at elevated levels, or will the combination of higher prices, economic uncertainty, and shifting habits lead to a broader slowdown? For now, the data suggests that the surge in March was an outlier and that the underlying trend in retail sales is more modest. The declines in gasoline station and auto sales are particularly noteworthy, as these categories are often seen as bellwethers for the health of the consumer economy. As we look to the months ahead, there are several factors that will be worth watching. First, how will consumers respond to the higher prices resulting from the new tariffs? Early indications suggest that some shoppers are already cutting back, especially on big-ticket items. Retailers may need to adjust their strategies, offering more promotions or focusing on value-oriented products to keep customers coming through the doors. Second, the ongoing shift toward electric vehicles and alternative fuels is likely to continue reshaping the energy and automotive sectors. Gasoline stations may need to adapt by offering more charging stations and diversifying their product offerings. Finally, the broader economic outlook remains, uncertain. While the job market remains strong and wages are rising, higher prices and global economic headwinds could weigh on consumer confidence in the months ahead. In summary, the latest retail sales data paints a picture of an economy in transition. The dramatic surge in March, fueled by a pre-tariff buying spree, has given way to a more cautious approach by consumers in April. Gasoline stations and auto dealers are feeling the effects most acutely, while other retailers are adjusting to a new normal. As always, we'll continue to monitor these trends and bring you the latest updates on how they're shaping the American economy. For now, the message is clear. After a period of extraordinary activity, the pace of retail sales is slowing, and both businesses are adjusting and consumers are adjusting to a changing landscape. As the retail landscape shifts and consumers adapt to new economic realities, staying informed is more important than ever. Whether you're a business owner, investor, or shopper, understanding these trends can help you make smarter decisions in a changing market. Don't miss out on the latest insights. Subscribe to our updates, follow us for real-time analysis, and join the conversation. Share your thoughts below. How are these retail changes affecting you? Let's navigate the future of retail together. Please comment below and keep the conversation going.